We are debt-free company, not for we are for last 4-5 years. We are operating approximately 56-57% gross margin. We have been protecting. We are opening only those number of stores which is from internal accrual only. You increase some portion of discount, you will get the sales, right? But once you are giving this freebies to the customer, it is very, very difficult to take it back. I am telling you.
Hey everyone, this is Prashant and I'll be your host for the VC to Next podcast. And today we have Shivendra Nigam with us. Shivendra is the CFO of Cantabil, one of India's most successful and enduring apparel brands. Cantabil, founded in 2000, has scaled to over 600 stores across 20 states while remaining debt free and laser focused on sustainable, profitable growth. The conversation covers bold expansion strategies, secrets of margin protection in a fiercely competitive fashion market, the brand's unique positioning in India's family apparel segment, and why disciplined retail operation matter more than chasing numbers. So without wasting any time, let's dive straight in. This episode is sponsored by my own podcasting agency called Podcast 10x, where I help venture capitalists, asset managers, allocators, and family offices in starting their own podcast and building a strong brand. Podcast 10x is designed in a way to work well with the busy schedule of investors, where we handle every aspect of podcast production so you can focus on investing. If you're looking to build a strong investor brand, starting a podcast should be right up your priority list. It's the only form of marketing where you can showcase your strong network, in other words, access to limited partners and founders, and grow that network further. And contrary to what most people hear, it's still very early to start a podcast. There are at least 10x more newsletters and 1000x more blogs than there are podcasts in this world. You can learn more about our podcasting services at podcast10x.com. I'll make sure to add the link in the description below. Enjoy this episode. Hey Shivendra, so good to have you on the VC10x podcast. How are you doing?
I'm good. Thank you for having me on your show. Things are doing great. Thank you.
Yeah, glad to have you on. I think it's the first time we are hosting a public company CFO on the podcast. So it's also a first for the podcast as well. Uh, Also, a reputed company like Cantabil that we're going to be talking about, right? So very excited for this. So to start with, how would you assess Cantabil's competitive position in the very competitive Indian apparel sector compared to the major rivals out there?
So, what to tell about Cantabil? Probably in organized retail, if you'll see, this one is the oldest one, specifically in the region north-based. We started it, but still today, all over India, we are there, right? So, very, so hardly you will be find such a long-term sustainable brand, 25 more than 25-year-old brand. So, Cantabil as a brand, we started in 2000. Many brands come up and go, but we are still there, right? Because we are a believer always in a long-term sustainable way. So we made our positions, no doubt. We made our positions in a way that it's, Cantabil has always been a brand where, young aspirant customers is always, lucrative for them, right? Any aspirational, youngster wanted to associate with the brand. Specifically, if you say tier 2, 3, 4 or beyond, Cantabils are perfect for them. So we made our presence, we made our mark for last 25 years. This is a 20th. We started in the year 2000, so continuously, we are all over India today, except South India a little bit. So our competitive position is very, very, very strong. Where in fact, what is biggest plus for us in any of the brand you say there are specifically in fashion, if you go, it would be hardly found a brand specifically in EBOs who is selling such a large variety, whether it's a formal, whether it's a casual. There are brands who are very good in, formal wear. Competitive sets are there in whether it's a formal wear. Few brands are very good in a, casual wear. But Cantabile is such a brand under one roof, probably the only brand which is having such a deep range of formal wear, casual wear, women's wear, kids, accessories. So it's a whole, whole family wear brand is there, but we are trying to grow it as well. So that's great. Cantabile is known for is this one. So great.
Absolutely. Yeah, it's interesting. The brand Cantabil is almost as old as I am, right? So I'm also a
Correct.
2000 year born. So it's like
Okay.
both 24 years.
Absolutely. Cantabile were also born in the year 2000. You are going, we are also going. Great.
Exactly. Both going strong, I'd say. Uh,
Correct.
Great. What have been the primary drivers behind Cantabil's consistent double-digit revenue and volume growth in recent years?
So if you see, we are constantly growing approximately at a CAGR of approximately 20% plus, right? Last 5, 6, 7 years, the history you can take. So as I just said, ki we are a believer in a long-term sustainable business. Cantabil, apart from tier 1 cities, if you say hardly 8 big cities in the India, tier 2 and tier 3 expansion, we are very sound in terms of our expansion, right? So how doesn't mean ki we are a cash rich company. We do not believe in debts and other things. So we can have a store opening, number of stores can be opened, but we restricted ourselves and we know how our brand positioning is and how many stores are viable to open. So 70, 80 stores net of we are been opening constantly. We do not a believer in the numbers. Still, we are 600 plus stores all over India right now. We are registered in 20 states. We are doing business in 20 states in India. But we are not a believer in number game. It's a 600 plus stores or even 500 plus store would have been there. Unless until as a business you are profitable, that is what required in terms of business. But at the end of the day, we are here for business. And business is about not only top line, it is about bottom line as well, right? So we are very constant in maintaining our top line with the sustainable growth as well as bottom line. So the drivers, if you see sustainable numbers of store openings, we are continuously having 70, 80, 90 stores we are opening. Going forward, there is a plan to increase them. But no store is running in the losses. We do not believe in running in the losses. So this is what the primary goal for us, to have a constant double digit growth. At the same time, it is important for us to have a same store sales growth, because obviously retail is a business we have seen from a long time is a business of expense. We all know what to the moment you are strongly positioning a debit side of our P&L, you will be able to sustain. So we are controlling cost going forward also. So these are the two, three main drivers. Consistent growth in terms of number of stores, concentrating on the same store sales growth, as well as controlling our cost. These are the few parameters specifically looking for the retail. Since that Cantabil is in the day it has been born, I also grown up with them, because my professional career is approximately 21, 22 years, and is luckily it was in retail only. So I only seen the companies to be closed specifically in retail, right? Retail has always been in stress. So we know how to grow, limited growth, good growth, long term sustainable growth, containing our margins, that is very important. And when you are been optimizing, continuous optimization of cost processes more. So these are the two three main drivers: sustainable growth, few number of 70, 80 stores to be opened, focus on same store sales growth, and controlling cost.
Got it. Yes, that's quite interesting. And with that large and solid focus on retail sector, right? Nowadays, we are seeing brands moving online and new brands coming up, even startups starting to compete in the apparel space, right? So, how do you look at that from the company's perspective? Have you thought that okay, maybe we should also build an online presence and also start selling in an e-commerce way, and build that business also, or do you still want to continue your strong focus on the retail presence?
So just for the information, we are also in online as well. E-commerce also is there. We started it late. Around 3 years back, we started e-commerce. But today, Cantabils equally presents both in equally presents in e-commerce is contribution is also good, whether it's a market player as well as own website. So for your information, for the larger audience information, we are very well present in our e-commerce platform. When 3 years back, post pandemic, we only started it, right? When we started 3 years back, FY23, I remember we just started it. The business was hardly 2.5%, but we make it 2.5x next year. That is FY24, and FY25 we have given approximately 6% of our 6.5% of our total revenue. Last year we did approximately 721 CR of the revenue, out of which my 6.5% of the revenue from e-commerce section, right? And as I just told, we are present in all the marketplace leading, whether it's a Myntra, Agio, Flipkart, Amazon, as well as own reference. So Cantabil is very well present in the e-commerce section. And going forward, our plan is very clear. Down the line, next 2 years, we are very much visible in terms of making the mark of 1,000 crore revenue company. By FY27, the Cantabil is going to cross the 1,000 crore revenue company. And obviously, next 4 to 5 years, we are planning to make it from 1,000 to 2,000 crore. When I'm talking about 1,000 crore, we are very in positions to take a 10% of approximate revenue from the e-commerce segment. So these are the challenges, because if you are there in fashion, if you are there in the garment retail, you have to be there in e-commerce channel. So all the channels has to be open. All the channels for the consumer is required to open. Today, if you go to the market, consumer first browse their app and web, searching to the board कि कहाँ पे दुकान पे जाना है, they go to the shop and buy, or even the reverse is that they buy and they go. So it's there. So it's by default, if you are there in your fashion business or anything, so e-commerce has to be there. So we are very well there in the e-commerce way. The sale is coming good as per our expectation, as I just told. Going forward, we are thriving, going to thrive in this section as well. So great, online, offline, omni channels, all the possible avenues are there for the Cantabil.
Absolutely. Yeah, that's a great insight there. That Cantabil is already building a strong online presence and the revenue is already growing on that front as well, right? So, to dig a little bit deeper on the retail front, because I know that's the complex piece of the puzzle that you seem to have cracked, right, as a brand.
Right.
How do you make the decision whether to start opening store in a particular state, right? And how do you choose which location to pick for the store to be opened? Right? Does it have to be, top tier malls always where you get a store and start selling there, or maybe the local? I've seen scandable stores in local markets as well, at very strategic locations as well, where the footfall is very high. So, can you give me an insight into the thought process behind what store to open, where to open, and how do you determine the success of the store after it has opened?
So yes, selection of a store is very important in retail. We are always believer the selection is a base, and obviously it is retail is all about location, location, location. Very important, specifically in fashion. So first of all, for the information, we are mainly a high street dominated brand. We are very few presents in mall. However, 10% of our out of 600 stores, approximately 50, 60 stores are there in mall. But we are more keen about the high street footfall. And any of the good market, whether it's a NCR itself, we are having 900 store approximately. You will find Cantabil is there, because footfall is absolutely buzzing in terms of high street market. Right. So, coming back to your question about how we are selecting our stores in terms of selection, and how we are monitoring our stores. So, there are few basic criteria. We are giving approximately 1.2 to 1.3 CRs of revenue per store as of now, right? Obviously, there are stores who are giving +2, +3 CR, few are. So there is a larger audience for selection of the stores, I'll say. There are few parameters which we have been always monitoring before opening a stores. Like obviously, there should be today very important in terms of fashion. People are going with the family, right? So it's not about spending and just buying the clothes or buying the garments. It's a day of outing as well for them. Today in scenario, hardly people are getting, 1 day in a week, and when you are been getting whole 1 day in terms of shopping, you need good space, good shopping experience. So there are few parameters. Cantabil is a store where you see today, it's any of the store you see, it's a high class store, no doubt about it. For selection of the stores, obviously, when you come to the financial, we are targeting to not to where potential revenue we don't see less than 1 CR on an annual basis. So these are the basic parameters. Facade should be 20 feet, right? There should be a proper parking space. So these are the financial and other KPIs to opening a stores. Mainly to open a store, these are the basic KPIs what we have been following. However, giving the greatest of the ambience in terms of shopping experience for the customer, we are keeping it. We are keeping it. Obviously, there are few decisions out of these larger stores when you are opening approximately 100 stores every year. So there are few percentage of the stores are bound to get closed based on the performance. So we monitor also 2 3 months. Obviously, a store is required approximately 2 to 2.5 years of maturity, right? So when we are giving this opportunity, even it's not working properly as per our expectation, so few stores are get closer. So for opening of the stores, larger store, it should given approximately, as per our estimate, on the basis of area, not should given in less than 1 year of the revenue. There should be a proper facade, proper parking space should have been there. Then we have decided to go to the stores and we are opening the stores.
Right, absolutely. How is Cantabil leveraging its presence in tier three cities to gain market share?
As I just told you, going forward, it's retail or garment retail is not about only tier one cities, not only big cities like Mumbai, Delhi, Kolkata, Bangalore, Ahmedabad, and these 8 cities which are coming in the tier cities. Even the tier two cities are bigger than few of the tier one cities, and tier three and tier four requirement and the demand is absolute, absolute great. The young aspirant customers who are in the bracket of crossing 20 to 25 stores, because Cantabil is such a brand where you can start your career from 20 years, and even if you are to a retiring age, 60 to 70 years, we are there to serve you. Absolutely no doubt about it. 20 to 60, 70 years. So, leveraging our position in tier 2 and tier 3 cities is very important, and we our opening majority of the stores what we are opening going forward as well, and last 2 3 years we are opening, it is in tier 2, tier 3, and even tier 4 cities, because in many of the places we are always gaining share in terms of first mover advantage. First mover advantage has always been there for us, and we created as a Cantabil such an old brand, specifically in north, or you can say Maharashtra side or Gujarat side, western part of the India. South India obviously we are not yet moved, it will be down the line 2 3 years we are moving it. We are creating the market, no doubt about it. Many of the places we moved and market has been created. So tier 2, tier 3 cities, continuous expansion would have been there. Huge success is there, huge demand is there in terms of young aspirant customer. Because I told you now, we are being positioned in a very fine place in terms of ASP. Cantabil is a brand which is operating in a ASP of approximately 1100 rupees. There are brand, and we are positioning ourselves as a mid premium segment. Cantabil is perfect for mid premium segment. Our position, our target audience is mid-premium segment. There are brands who are serving at say 400 500 rupees of lower middle segment, and there are obviously premium and ultra premium brand. Right, if a shirt is coming at a office going boy or office going young customer want to go to the office, they want a set of 2000 to 20 to 25. Cantabil is perfect for them on a daily basis. Right, there are players who are selling 3000 4000. Right, so for this tier 2, tier 3, and even beyond, you can for Cantabile is perfectly there. We are opening majority of the store in tier 2, 3 and beyond, and we are perfectly leveraging our position.
Absolutely. Yeah. Thanks for sharing that. And what is Cantabil's roadmap to achieve the 1,000 crore target revenue by fiscal year 27-28? And what strategies are in place to support that?
So as I just told, two, three things are important for us. It's we are just clocking like last year we closed our revenue of 721 CR, and we are continuously growing with a CAGR of 20%. So FY27 is clearly hitting the 1,000 crore of revenue. So how to achieve this 1,000 crore, and not only 1,000 crore, from 1,000 crore to 1,500 or 2,000 crore journey would be there. The plan is there for this. So how does it going to be achieve this the target? So as I just told you, we are expecting 20-22% of CAGR growth continuously. How this 20-22% is going to be achieved, as your question is required. So for us, it is important to have a same store sales growth is approximately 7 to 8%, because obviously when retail are there every year, 4 to 5% expenses are increasing, salaries to be increasing, rent to be increased, and other expenses to be increased. So 6 to 7% of the growth, what we are been expecting from the same store sales growth, it has to come, and it will come. And then, as I just mentioned, we are just pushing ourselves and for e-commerce as well. So when the 1,000 crore would be there with this growth, 8 to 10%, we are targeting 100 crore of the revenue. You can say broadly 80 to 100 crore of the revenue from the e-commerce segment. Apart from this, not only 1,000 crore, 2,000 crore roadmap will have a very important role. We are a out of 600, we are a complete family wear brand, right? However, initially it was men's dominated. So men's is 50% of the men's store and the family wear. Now we started a specific exclusive store in terms of ladies and kids. We have a 45 family wear stores are 50% is there, where ladies is there, men's is there out of the 600 store. But now the market is just, accepting the ladies wear. However, we are there in from 2008 in ladies, but now we started opening exclusive stores for ladies and kids as well. Right. So we have a 45 stores as of now. So going forward from 1000 to 2000 crore journey would have, this will have a pivotal role in terms of expansion. Right. Ladies and kids, because this is now on. So our, like this, we have a 600 stores. Going forward, it is 80-90 stores a year on year basis. We can have a 200 to 300 exclusive stores for ladies and kids as well. That would also be there, right? We started shoe rain. That is a tremendous response. This is just a hardly 6 month or 1 year over for business. They started giving revenue as per our expectation. So this can be a big range. So coming back to your question, how to achieve 1000 crore, what are the levers for that, or 2000 crore, because 1000 has been done. Now we need to think beyond it. So e-commerce would go to a very strong side. Ladies and kids stores is going to be very, numbers of stores going to be increased. Shoe can have a great witness. So from this 1000 to 2000 journey is on, absolutely on. But we are always been a believer of long-term sustainable number, good growth in terms of number of stores, keep the company debt free. That's important.
Absolutely. Yeah, that's very good to see. And talking about the evolution of the company, so you've been at the company for some time now, and the company has been around for 25 years. And in the past 25 years, we have seen changing times, especially as India, a high growth nation that's changing every day, right? And people's priorities and choices are also changing every day on what they wear, what they want to wear, right? So, how has the company evolved from that perspective? Like you said, now there are separate verticals starting for women specialized stores and then kids as well. Maybe 25 years back it was not required, right? But today it is, right? So, can you give me more examples of how the company has understood the requirements of people and their changing needs and catered to that and evolved because of that?
So very interesting question you asked. When we started in 2000, then I can, just for the discussion, I can break down the journey 2000 to 2010, then 2010 to 2019, then pandemic came, and obviously post that. So brand has been started in the 2010, and we got as a company ourselves listed in BSE, and as we are a listed entity, and in 2010. So first 10 years, obviously, the company has been started by Mr. Vijay Bansal, who is basically from Jind, Haryana. He came in Delhi in 1987, and first 10, 12 years from 1989. Company has been established and registered in the year 1989. Cantabil brand is started in the year 2000, right? So before 10 years, before starting the Cantabil, he was in the accessories, garment accessories business. And anything what Bansal sir has started, he was leading that. That is why third thought process came through the and establishing the brand to the Cantabil. So from 2000, 2010, obviously it's a journey of establishment. Company has been established. Cantabil has been established. Stores have been established, specifically in North region, Delhi and NCR region, you can say mainly. Then 2010, we got ourselves listed. In the year 2010, when 2008 recession came by the Lehman Brothers, if you say, and 2010 garment was the most effective business. Many brands came in the market and vanished. Right? I'll not take the name, but many brands who are our competitor and who got vanished. So for us also, it's the biggest learning, honestly speaking. 2010 when the Cantabil break, 2010 and first 3 years of the post, we also make the losses because huge amount of inventory piled up in the market. Many brands came, inventory was also there. A different discounting model started coming. Buy this, get this, buy this, get this, kind of thing. So the quality of the garment was not being taken care of. Instead of, it's more focused on discounting and other things. So we also got suffered heavy losses. But very smartly, Bansal sir came to know कि no, if you want to run the company, specifically garment retail, you need to take some actions. And immediately learned, he stopped all these schemes. By that time, I remember there was another brand. There was approximately 400 post IPO. Cantabil was also having approximately 400, 450 stores. There was another economical brand has been launched by us. That's a Lefanso. What we closed down completely, because when you are too much of in the discount and other things, we all know it's all about controlling your retail cost. So it started giving the losses. So immediately, so good point is that he understood what the requirement of the market, what the requirement of the consumer, and his vision. Obviously, when I see, I didn't see the visionary like this. So he visioned it कि it would not, नहीं ऐसे नहीं चलेगा, ये नहीं चलेगा. He immediately shut down all the stores of Lefanso, cut down the stores of loss-making Cantabil, and only left with 150 stores. By the I'm talking about FY 2013-14. And in next 3 years, he completely kept the company in a correction mode. When I'm talking about correction, each and everything has been corrected, starting from your store ambience, starting of your store furniture, starting from your garment quality, your policy in terms of discounting, how much we are going to give, and other all KPIs. Probably I can bet we are the best in basic KPIs, what is required in terms of retail. And then only when I joined the company in 2017, the day GST came, I joined the company. From that only the day FY18 we started expanding. Exactly, I remember it was 160 stores in FY17 and 160 crore of the revenue. Then next year FY20, very cautiously we opened only 20 stores. And my closing number, I exactly remember 190 stores and 196 crore of revenue. Then only everything was set. Then only we started from 50 odd store in 2017-18, you can say, and today we are four times. Then journey came, you say 2010 to 2019 journey is there came. We were set thanks to pandemic came. More learnings are there now. Learn more and do more. But we did not stop ourselves because we know that unless until in retail specifically, uh, if you stick on your basics parameter or basic KPIs, you will be there. So even in the year of pandemic, we opened 30 stores. People were just closing down the stores. And this one, I exactly remember FY 2021 when the pandemic had completely killed our first 6 months of the business. Next 6 months, we did not stop ourselves. In fact, we created an opportunity. We were getting the properties on a better rental. We foresee the opportunity and get the more properties. The 30 stores we opened in the year FY21, and then it's keep on moving. So that is coming back to your question, what the learnings and how the customer, because that time what Bansal sir has discussed and seen, ki inventory was completely piled up. But for mix and match, he started producing 20% of new inventory. So what he realized, specifically, I remember many time I discussed with him, he whatever the new merchandise we are say giving to the stores, it's selling out and wood. Then why not making those only those merchandise which is required by the consumer only, right? So these are the learning phases. First 3 years the loss making phases. I'll say 2010 post IPO 2030. The next 3 years is most about the learning phases where we corrected everything. Everything started from the merchandise, the stores ambience, everything, and then we only started from FY80, and till that you can see where we are. So understanding the government, understanding the consumer need, giving him the best of the shopping experience, as I just said, because shopping today specifically for leisure or garment, it's like a journey where you are spending your whole time, whole day with the family and everything you go to. You need to wear, this is our, as a retailer, our responsibility to give you the good ambience. We need to give you the feel good factor. Otherwise, why? There are a lot of competition there in the market. Why? So that is why, sir, the learning, understand the consumer, given the best merchandise, because quality is very important. Whatever a customer is ready to pay you 100 rupees, 200 rupees more for his shirt, but if the quality gone, you are gone. So our tagline also there that we are serving the best quality and very competitive price. So these are the
Right.
learning, and we are just thriving now.
Absolutely. Yeah. Thanks for sharing that story. It's an amazing story. Right. And you talked about margins, right? And this being a very competitive space, a lot of big brands also competing with you, right? How do you maintain those margins and profitability as you expand your product range and store network, right? In this very competitive market, because a competitor is also trying to capture market share, right? So how do you keep your profit share while also maintaining competitiveness and not letting others take market share?
So for us, because in sentence, as you say, margins, people are directly jumping from revenue to EBITDA margin. Whenever you discuss, even I discuss with my investor the thing, because I know, as I just told you, for me, it is important how you are protecting your gross margin. The moment you will be able to protect your gross margin, the moment you will be able to protect your gross margin, EBITDA margin is bound to come unless until you are being able to, if you are being able to control the left hand side of your P&L account, right? If you are protecting your trading margin, which we are operating approximately 56-57% gross margin we have been protecting, and you are controlling your cost, EBITDA margin is bound to come, right? So it is being there. As I told you, if you can compare, we are the best in terms of margins as far as compared to peers. Better in fact, better in fact. So these are the basic things. Control your discounts, because government, specifically after revolution of e-commerce segment, mostly it's been, discount e-commerce are giving the discounts, and other brands are giving the discount, competition is there. So you need to know how much gross margin you need to protect, and how to protect it, how much discount you need to control. So we are best in controlling our discounts, keeping our gross margin in hand. Obviously, you can get the sales, no doubt about it. You increase some portion of discount, increase some portion of discount, you will get the sales, right? But once you are giving this freebies to the customer, it is very, very difficult to take it back. I am telling you. This is what our experience tell you. So this we need to say is, it's like a medicine. It's like a medicine to your, you know, patient, ki how much medicine is to be given and when medicine is to be given. It is very much required. Discount is same. How much discount is to be given and when the discount scheme is to be given. The moment you increase that discount, definitely 1 year you will get the good amount of sale, but later on this is bound to bounce back, right? So we are very well controlling our discounts and protecting our gross margin. The moment I protect our gross margin, I know how to control my expenses, and then the margins are there. So this is all the basics. We are controlling our discount and getting the better margins. Simple.
Right. Yeah. Very insightful. Thanks for sharing that. Right. And what are the biggest financial risks or challenges that Cantabil faces in the next 3 years, and how the finance team is preparing for those challenges?
Right. So if you see, the biggest challenge for not only for the company, for us or anyone, is debt. Right. How to protect your debt? So we are, giving. So we are debt free company, not for here for last 4-5 years. We do not take our legs. Yes, as the earlier question from your side was also been there. Yes, we can expand. Why only 20%, 20, 18, 20 or 22% of the growth is there? If I open more stores instead of 80, 90 or 100 stores, I can open 200 stores as well, right? Because we are having funds, right? So first of all, we are opening only those number of stores which is from internal accrual only. In last 4-5 years, if you see the data, more than 200 crore of the amount of capex, and we have invested in the business 250 to the 300 crore, including inventory, have been, that is all from the internal accrual. Right, we are keeping our company debt free because it's very important, because that give you, not only give you the interest and other, but it gives you the tension as well from promoter side. That is there, it is their store is not performing yet. Then what is happening, I see, you started taking the decisions in terms of store performance fastly. If a store is not been able to perform, every week or every month you are analyzing your Excel sheet. Excel is the biggest tension in your life, honestly speaking. This is my personal experience. When you are opening the store, Excel give you the tension. When you are analyzing the store, Excel give you the tension. The moment you have debt, you started taking fast decision in terms of closure. It's not performing, let's close it. This project. So the biggest part is that we are debt free. At least we know ki how much my internal accrual in there and how much expansion long term sustainable we'll be able to do. So this is how we are. The biggest financial challenge is not there for us. We are protecting ourselves as keeping the company debt free. As far as other challenges are concerned, because in retail, if you see, there are mainly two biggest costs. One is your rentals, one is your salaries, and some other expenses, electricity, others. It's not a rocket science kind of game. So you need to protect this one. Even in the pandemic year, we have some good relationship with the vendors, as well as some protective clauses are there. Protective clauses are there in terms of agreements which we protect. So debt free, if you are not keeping, you are protecting our things. Even in the pandemic, you see, we open 30 stores, so we don't see much financial risk. Rather, even in the worst scenario, what will happen? Our most probably we will not be able to expand in couple of quarters for as per our desired numbers. That's it, not more than that. So that's it. We don't see much financial risk in terms of business because we are protecting them, and moderate growth of 20-22% will keep on coming.
Absolutely. That's quite interesting how debt plays a key role in the financial discipline of a company, right?
Right, absolutely.
Uh, Talking about financial discipline and even compliance, right? How do you think about those things while supporting Cantabil's aggressive growth and expansion plans?
You're talking about the CFO role in that, or
Yeah, you obviously your role and how do you think about compliance as well as another piece, right?
absolutely. So as I told you, uh, we are listed entity, and when you are listed, you are bound to do the compliances, and these are the basics, right? Because when you do one, what I always explain to my team as well, you spend 1 rupee. When my accountant come with the voucher, he spend 1 rupee. He prepare one voucher. One guy is preparing one voucher, but that voucher is be analyzed at least by 5 people: my internal auditor, my stat auditor, my internal audit itself team, right? So what I'm trying to say, when you are listed, not only listed, even in the basic thing today, in today's world, after specifically after when the GST came, very watchful. Agencies are very watchful. Government agencies are very watchful. So the compliance is a basic thing. And how can you protect it? You need to inbuild in the system itself, right? Inbuilt in the system itself. So I tried always to, I'm a believer. Yes, obviously, 100% take practically is not possible. Below 80 or 85% is crime, but always trying to make this 80 to 85% in a bracket of 90 to 95%. 95 to 100% bracket will very difficult to achieve. So in terms of not only compliance, any of the process in the company, today we are completely process driven company, completely process driven company. नॉट इवन इवन इफ यू से, अगर मैं बोलूँ इन माय फैक्ट्री, धागा भी बिना सिस्टम के नहीं लगता है. तो इनिशियल फॉर प्रोडक्शन डिपार्टमेंट, initial they get irritated, sir, what is this, kya hai, matlab, but once you do the process in a longer term, I'm not talking about 600 stores or 1000 crore of revenue. We are looking for 2000 plus revenue when the stores numbers would be 1000. So who will work? Maybe I can't work, human being can't work, only systems are going to work, honestly speaking. More data driven theories would be there. Retail is all about detail. From since day one, I'm really retailing is all about detailing. So going forward also, the everything is systemized, not only compliance and other things going. So that's the basic things. Everything is being system driven. We tried to put everything in the system itself. Whatever is required, only manual intervention is required for first phase, but second phase and onward, it has to become in the system. So that is a very simple thing. So this is how we are been doing.
Right. Very interesting. And also give us an insight into the job of a CFO, especially at a public company, right? What are the key responsibilities there and what does your day to day look like?
Role of a CFO is more about, I always told my team ki what I do when I analyze what I do, because honestly speaking, as far as expertise, balance sheet expert is there, accounting expert is there, marketing expert is there. So all the expert are there. So what I am doing, because I am also dependent on the expert. So what I found myself, because we are listed, as I just told you, listed. So there is a complete structure. When there is listed, the responsibility of a CFO is from coming from the where. Number one, my investor is there. My moral responsibility to them is to be give them the absolute transparent position. Because unless until I give them the confidence, whether it's a bad, whether it's a good, today company is performing, it's not that because we are listed, it's not about annual, it's about quarter, right? Quarter on quarter I have to perform. Yes, so to be very honest. So not only listed company CFO or any of the CFO, they are in middle of everything. Who is holding the things? How? There are shareholders are there are investors are there, then you have a board is there, then once we are listed, then you have auditors is there. So these are the outside agencies without being there. Then come to my team, our team. Then we have all the backend department, IT department is there, other department is there. So very concisely, if I'll define, holding all the department together from this one and releasing the information to the board, to the investor, and keep them hold as a company, giving and keep the things transparent. Honestly speaking, is single mantra. Keep the thing as transparent as possible. And so the CFO job is very simple. After पूछा what is the CFO's role? I am telling the simplest role is of CFO, right? Because all experts are there. He is going to report to all the other guys. He is just in between the expert or sandwich वैसा हाल है, but it's clear. So very simple role, but to be very transparent with all the agencies, whether it's an investor, whether it's your auditor, whether it's your people working under you, departments working under you. So this is like a backbone.
Absolutely, completely agree. And these are all very important agencies, and that your job is very crucial in maintaining all of them, managing all of them, right? So, how do you use financial data and MIS to guide strategic decision making at Cantabil?
Honestly, when I started retail, because my first job mostly is 20 years at the past 21 years, it's data. Retailing is all about detailing. Simple. बचपन में मेरे गुरुजी ने समझा दिया था, retail is all about detail. The more and more you get detail, and how that detail would come, this is all about your financial data. How we will improve, it's all about basic KPIs, right? Whether my KPI is about ASP or ticket size or repeat customer, any of the KPIs. So it's very important for us as well to how to use the data. Number one, the most, what is the backbone for the retail? It is not about your final balance sheet what the larger public is doing. That is just a number which has been collecting from all the data and has been given, right? The working behind it, store level, anything you data, whether it's a store level P&L, your inventory, what is the basic? बचपन से हम सुनते आ रहे हैं कि retail is all about inventory, 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 right? So how you are managing your inventory, how you are giving your inventory. So very finely using your data in terms of detailed data, in terms of retail data is important. So how we are using it, there is a monthly MIS system, there is a other system. Now going forward also AI is going to be very important. AI is going to be very important in terms of giving you the automatic inputs, automatic input. So we are using our data very smartly. All the basic API has been inbuilt system. They are the systems is only giving the numbers. We are analyzing and taking actions on this. Simple.
Absolutely, that's quite interesting. And when we talk about data and internal metrics that you track,
Right.
what do you think are the most crucial metrics that you obsess over at Cantabil?
So for me or for the company as a whole, what is important as I just to protect our P&L part or the balance sheet part, balance sheet simple to P&L part. So metrics, what we are very important, two things. Number one, how you are managing your inventory. In retail is mostly we think about the inventory because customer is very choosy. One season you have, whatever you are telling, you cannot sell 100%, right? You cannot sell 100%. So if you are getting as per your parameter 80-85% of the clearance, then how you are managing your balance 15 to 20% is very important. That is a continuous task. So that is the biggest KPI what as a retailer we need to follow. There are very importantly and very helpful. There are enough channels are there. E-commerce is the biggest channel to clear your aging inventory. Then other channels are also there, what we have been adopting as well. So very important to how to use your KPIs in terms of inventory. There is a regular team, there is a retail merchandising team who is doing things. Then there is a front end KPIs. Front end KPIs is to be followed in terms of ATV, in terms of your ticket size, your basket size, your per square feet. Very important data. How much you are per square feet sales compared to store, region to region. Region to region wise, how you are 20 states we are in one region is obviously if you go to the Maharashtra region, costs are obviously very high, right? As compared to North region or Central India region, right? So how you are managing your KPIs in terms of front end. So that is what important. I was saying profitability ratios are important month on month basis. Profitability to be analyzed, and apart from this, inventory is to be analyzed. So these two three are the important KPIs we are regularly follow, which are the backbone because these two three areas are covered approximately 80 to 90% of your business, right? So you need not to monitor every month. The rest of the 10-20% is more about annual compliance kind of thing, which you need to follow. So if you are following your front end KPIs better, if you are following your inventory cycle better managing, then because inventory is a very important thing. Why I'm saying once your inventory is in control, now it will reflecting in your cash flows as well. So your cash flow is going to be maintained because best of the ROI is to be come from there. Right. So many things. So you need to follow your basic KPIs in terms of operations part. You need to back end part, the inventory. आधी team तो inventory में ही लगी रहती है. Right. So they have to think about the inventory. So these are the two, three data points which we have been following.
Right. It's quite interesting. Thanks for sharing that. And my last question before we try to close this out: how do you look at the future of apparel in India, and do you also have global ambitions of tapping into other markets as well?
Now the time has come for the, honestly speaking, for the retail, specifically because if you see for last 10 to 12 years, Government also was supporting more about capex, because always there is a battle on capex versus consumption. In last 10-11, if you see, it's more about infra. Tremendous job done in infra, no doubt about it, right? So the money has broadly has gone in last 10 years in capex, infra project, national highways. You see connectivity, it's amazing, no doubt about it, very well. Then the government has definitely realized, probably it's not realized, it was due. I'll say the consumption and spending toward consumption was due for a longer time. Now they realize, and you see, it started from last year itself. This is the last year, two times RBI cut the rates 0.25 in terms of repo rate, and this immediately, unexpectedly, they reduce zero point 0.5 as well. Apart from this, in the budget, in last waiting, the consumption 1 lakh crore of the tax bonanza has been given. Right. So government in the last budget, which has been started effective from April onward. So people, the moment the people are getting more disposable income in hand, more about disposable income in hand, obviously, even in my, I always say the company, my company, Cantabil is about, say, mini India. We have a 5,000 plus employee, and all kind of employees are there. You see, India's majority of the, because my production is a labor class, right? So labor classes majority is being there. My store staff has been there. Then mid premium segment customer is there, and premium customer is also there. It's like a mini, Cantabile is representing a mini India, what I personally feel. I need not to go for the survey anywhere, just a company ka survey kara lo, that's enough, right? For anything. So when you go like this, so you will see the government is continuously supporting now consumption as well. And huge amount of money has been pumped in the market. So definitely future for next 5-6 years, clearly for the consumption. And when the consumption is there, retail is there. And when retail is there, Cantabile is there. Super.
Absolutely. The perfect note to end this on. Thanks for doing this, Shivendra. It was a really insightful conversation for me as well. I learned a lot, and I'm sure our listeners will learn a lot and take away a lot about the retail space and how you think about different decisions as the CFO of the company, right? As well as how Cantabil is doing. So, thanks for doing this. Do let us know where can our people learn more about the company Cantabil. Where can they shop from you guys, since you have also have online presence? Do let us know where to get you.
So as I told you, as far as brick and mortar is concerned, we are represented in 20 states. We are not there as of now in South India. The biggest state of South India, 4-5 states, we are not there. Else everywhere, 20 states we are being registered. We are north based, all the states are there. Jammu Kashmir, we are very well present. Maharashtra, Gujarat, Rajasthan, we started expanding in central India. MP is being extended. So physically, we are 600 plus stores as of now. As well as on e-commerce, all the leading market players. Myntra, we are there. Ajio, we are there. Flipkart, we are there. Amazon, we are there. We are now in quick commerce also. Zepto, we are being registered. Good sale is coming. As well as we are having our own website, that is cantabilshop.com. Right. So we are completely present from your audience, from the larger audience. We are completely present in the brick and mortar as well. It's a large network. 600 stores is a large enough network. South is still vacant for us. We are going to expand down the line 2 3 years there as well. All the leading e-commerce players, we are being there. We are absolutely there in social media, uh, everywhere. All the influencer we are being associated who are doing continuous marketing with there. So guys, we are there for, completely for your family need in terms of garments.
Absolutely. I'll make sure to put the website link in the show notes below
That's
so
it.
our listeners can check it out as well. Thanks so much again, Shivendra, for doing this. And I wish you continued success at Cantabil.
Thank you. Thanks, Prashant. Thanks a lot for having me on the show. It's really nice talking to you. Thank you.
Likewise. Thank you.
Thanks.